two, one. Thank you so much for coming to check out another episode of the Stash Cast, where we have interesting conversations with interesting people focused on the world of commercial real estate and prop tech. The Stash Cast is brought to you by Needle. What if you could use data and analytics to predict real estate transactions? You can with Needle. Come check it out at Needle, NEDL.us to learn more. All right, today I'm excited. I've got Lee Yoder here with me. He's the president, CEO, founder of Threefold Real Estate Investing. Lee, thank you so much, man. Thanks for coming on.
Yeah, thanks for having me, Sash. Excited to be here.
Yeah, I was thinking about this earlier today in preparation, and I think in some ways you have a similar story to many other folks in who get into real estate and want to be escaping the W-2. But in other ways, it's also very different because I feel like you scaled up pretty quickly and that was amazing. That is amazing. For those who maybe aren't familiar with you, why don't you just give a little bit of background of who you are and what you do, and we'll roll from there.
Yeah, sure. No, yeah, I feel like Stash, you said it pretty well. Because I didn't really do anything spectacular, but we did really go for it, and we took on risk and took a lot of action. And then also we just were blessed with timing because the market was just shooting higher even from the time we started in 2017. It was already really on a nice trajectory, but then obviously the post-COVID boom really helped to expedite our journey. So I left a corporate job at the end of 2016, just feeling like that was not where God wanted me and our family. And I went back to doing home health physical therapy, which I didn't really enjoy that job. I wasn't really passionate about it, wasn't fulfilling. But I knew I wanted to do real estate on the side. I had networked with a bunch of people, talked with some people that were in it, and I thought I want to do this on the side and see if I can get this going and see what it's like. So in 2017, we flipped a house. That was successful, but just saw that's not investing. That's just trading time for money in real estate. But it got us into it, so it was a good way to get started. In 2018, we got a duplex, and these are just local right here in Lebanon, Ohio, where we live. And so that duplex flipped out, but had renters in it for a little bit, and thought, okay, this is investing. This is that residual income that can go on forever as long as you keep your property full and you own it and all that, take care of it. But we sold that because we wanted to scale up. In 2019, we got into some small multifamilies. We got a 16 unit, an 8 unit, and a 10 unit. I'm still working full time as a home health physical therapist this whole time. But we took all those, and into 2020, we're just repositioning all of them. I was spending a ton of time at these properties working at the GC. I was working with a third-party property management company, so I didn't have to do that part, but I was just out there running the contractors and the repositionings. Again, the post-COVID government reaction boom really helped. By the end of 2020, it was like, wow, these properties are worth a lot more than we paid for them. Yes, we put a lot of time and energy and money into them, but the market did the majority of the heavy lifting. And so I thought, man, if I sold these, we could put all that money in our savings, and we would have a big cushion, a big runway that would allow me to jump in full time. And so at the end of 2020, that's what I did. We sold 2 at the end of 2021, at the beginning of 2021. And I quit my W-2. My wife had already quit hers. She's a nurse. She was staying home with our kids, homeschooling and helping me as well. And so when I quit, we had no W-2. So I had to go find our own insurance and all that. It was pretty scary. We went months after that without making any money because we sold everything. So we made a bunch, but then that was our only. And then after that, we didn't make anything for a long time. But I started syndicating in 2021. And we've been doing that ever since, and want to continue doing that. We sold a couple last year, bought a few in 2021. But anyway, today we have 350 units, just 4 apartment complexes. We now manage them ourselves, which we started last summer. So that's where we're at today.
That's awesome, man. You're doing great.
No, thank you.
So a couple of things came to mind as you were speaking. You mentioned and acknowledged that your timing was great. You were able to ride the wave of COVID and post-COVID. Thinking about maybe risk a little bit, and I had a comment this morning on one of my LinkedIn posts of what are some strategies to mitigate risk in this environment. So I'm curious, what is your perspective on that?
Oh man, good question. From the very beginning, when I was trying to convince my wife to get into it, it was always like, well, what's our worst case scenario? And just starting with the flip, it was like our worst case scenario is we're just paying the mortgage on 2 houses. And we could handle that. It wouldn't be fun, but that was worst case scenario. Yeah, I think that's where I start with um, controlling risk is like, all right, if we're going to buy this apartment building today, this apartment complex, what if we get into a recession? What if rates go up? What if we get in a recession, occupancy goes down, delinquency goes up, things like that. I just think okay, what things can we control for? You can control for interest rates by locking your interest rate. That's one easy example. You can't control occupancy entirely. You can make sure that you're going to be okay even if you have to lower rent. That's one thing I look at a lot of stashes. I'm like, we're going in, let's say we're buying 2 beds. I don't know, they're renting for, 900 today. We think we can get them to 1,000. But what if rent pulled back to 850? What if, and usually in recession, rent doesn't drop by much, but it can. And occupancy can drop in a recession. So what if we're counting on kind of 93, 94, 95% occupancy? And what if it drops back to 90 or 88? And so in your underwriting models, you just want to put those numbers in and say, are we still at least easily covering the debt? That's where you want to be in those scenarios. It can happen. So that's how we look at it. And a lot of times that's, if you're going to underwrite it that way and prepare for that, you might not be able to offer as much as some other guys and girls. That's frustrating, but I think you got to make sure that you're going to be okay, even if worst case scenario happens.
Mm-hmm. Yeah, you have to stress test it and
Yeah.
yeah, just make sure you're doing the best to account for any and all variables that might be out there.
For sure. Yeah. And then the other thing I'd say that I've learned this lesson a few times now is just having a lot of reserves. So we got hit with some big tax settlements on some of our properties in 2022, and we had to pay a $90,000 bill, $100,000 bill, $145,000 bill on our properties. And I wouldn't even say that. So like I should have known that could happen. That was pretty extreme circumstance, but the point is you don't know what's going to happen. So you just have to have a lot of reserves for who knows what, right? There's some things you might have, this taxes could go up, this could happen. There's some things you know to prepare for, but then there's some things are truly unknown, but you still have to just have extra money there. So having a big reserve and CapEx fund, that's really important to
Yeah.
mitigate risk.
Yeah. Yeah, exactly. One of the things, so you and I toured one of my listings and you showed up with your wife and I was like, oh, I had no idea that the two of you work together. How does that work? How do you manage to keep a good family relationship while also working together?
Yeah, it's a lot of fun and it's very challenging at the same time. My wife and I are completely different. She doesn't go that often. Once we get a property under contract and we do the tour, she's pretty much always a part of that. Or sorry, the inspection. She's always a part of that. And yeah, she's a part of the business. When I did have a podcast, she edited it and put it out. Now we'll do videos and stuff and post, and she's the one that does most of that. Yeah, it's fun and challenging. Our kids are around a lot. Like I said, we homeschool. Our kids actually do a homeschool hybrid program. So they do go to school on Tuesdays and Thursdays. And so those are her days to work. Those are also her days to try to get everything done, around the house and do all the other stuff that she does to keep us all running. But she'll work on those days. And it's again, we're very different. So she's very risk averse and I'm a gambler. It's great. I think God put us together for that reason. It works out really well in the end, but it does cause us to butt heads a lot. I'm somebody that almost instantly, like, I'm excited. So as soon as you guys send out a deal, Sash, I'm like, I want to buy this property. That's my initial reaction. And then a lot of times I might dig in and be like, okay, maybe not the right area, whatever. But most of the time my wife, like, her initial reaction's, no, that's not going to be, that's not going to work. We settle in a good place. So that's interesting. But she definitely has some, that being one of them, just having better discernment, just better at picking up red flags and being wise and from those things. That's really helpful. And she has some other skills that I don't. Yeah, it's really fun, but definitely challenging. There's times like we're just talking about real estate too much and we got to just back it off and talk about something else. Yeah, there's some challenges in it, but we really do enjoy it.
That's awesome. I think that if you're able to strike that balance, which it seems like you guys are, that's a really great place to be in as a couple. And I think that the hope is that, you can just keep it moving forward like that. And if you have that balance, then that's only just going to strengthen your relationship as business partners, but also as a married couple as well. So that's great.
Yeah. I have another business partner and that's good too, because you need somebody else to talk to about real estate, somebody that wants to talk to her about it all the time. And so that's, because that's not her. I don't want to talk about it all the time. And then, my partner really helps out a lot on the property management side and stuff. He'll laugh because I'll tell him stuff sometimes, or he'll tell me something happening in the property. And I'm like, okay, I'm not telling Hannah about that yet. So just make sure you don't shoot the door. There's certain things that for example, we got a letter from our bank the other day that they were raising our interest rate on the construction loan that we have with them. It was supposed to, like, we're past the 2 years, so it's supposed to just be added to our other loan, which is at 4.375%. And they sent us a letter that said, this construction loan, which is 1.2 million, is we're changing the interest rate from 4.375 to 8.25. And that was nowhere. I'm like, what? I'm calling, I'm sending enough. They didn't respond to my email yet. But then I get another letter that says, your interest rate is being changed from 8.25% to 4.37%. So it's like, it changes and changes right back. So I didn't tell her about that. And I'm glad I didn't, because there was no reason to just start a fire there. You're like, put up the alarm bells, because it got corrected. So it's just funny for my partner. There's certain things I'm like, all right, we're not going to tell him about that yet. Let's wait and see how it goes.
Yeah, let's see if we can shake it out first.
Yeah. Or I got to pick the right.
Yeah. You've brought it up a couple of times so far in this conversation, and it's also something I know about you, but how does God play into your life and your business plan and things like that? I'm just curious.
Yeah, I hope it plays into every aspect of our lives. For us, that's what's most important to us, is to love God, to love people well, to honor God in all that we do. So it's just, that's our foundation. Like, that's what everything's built on, whatever we're doing, and work just being one of the things that we do during the day. And while we're here on earth, our goal is to honor God with that. And I pray about it a lot and talk about it a lot. What would God have us do in this? And how can we glorify Him through our business, through Threefold? And so sometimes that's difficult. Sometimes we don't know exactly what that means. But again, a lot of prayer and just seeking guidance from the Lord on, should we pursue this? Should we not? Are we going too fast? Are we going too slow? For me, it's, am I dragging Hannah along? And then Hannah, sometimes she'll feel like God's telling her, hey, you need to jump on board and you need to get moving. And so we'll both try to seek God's guidance on how we're even loving each other in the business. And then tactically, Sash, like, for an example, you get to the end of, you're bidding on a property, right? And you guys have a property they list price is 10 million and I'm at 10 or whatever. But then I find out there's some other guys that are above that, and you're going, okay, like, how much more aggressive should we get? And sometimes I'll just take that to the Lord and pray about that and try to get a feeling from Him on just, hey, should I just sit tight? And you know what? If God wants us to get it for some reason, we will. Or are we feeling like God's calling us to be even more bold and more aggressive? And so that's how it plays out. And the great thing about that for us, Dash, for Hannah and I, if we've prayed about it and we feel like both of us agree, like, we do feel like God's calling us to be aggressive on this and to go after it. If we do that and it works out, then but then, I don't know, ends up being a melon or something. It's, hey, we both felt like God was calling us that. Now we have to believe that He was wanting us to experience this difficulty. So that's the beauty of that, versus if we're not on the same page, if we don't both feel like this is where we're being led, then there could be some, like, a grudge between us, or she's going to feel like, well, I didn't want to do that. And you blew past me. Man, I rambled on, but that's a little bit of how we try and how it plays out for us.
That's great. I love it. So you mentioned you did a lot of your first deals on your own, and flipping a house, and then duplexes, things like that. And then you got into capital raising. How did you make that transition?
Yeah, just slowly we did. So on the multifamilies, the 16 unit, the 8 unit, and the 10 unit, like, my in-laws were our first partner. And so we just did simple joint ventures on those. You get 50%, you bring the money, we'll get 50%, we do all the work. And they were active. When you do a joint venture, everybody has to be active. They were, but mostly they were the money partner. We found the deal, did it all, and all that stuff. So we raised from them. My parents got in on the deal. Best buddy of mine from church got in on the deal. Those were our first 3 investors, just the people closest to us. And then on our very first syndication, we just had to raise $550,000. So some of those same people, but then another couple from church invested in that one. And then a couple of people from the RIA, the Real Estate Investors Association in Cincinnati, which I joined before I even got the multifamilies, the smaller ones. And so it just grew from there. It's just a lot of people we know. We do a monthly newsletter. We try to put out material and attract people, but a lot of it has just been family and friends, and then they tell other people and more people interested. And we try to join groups here in Cincinnati and be part of groups because a lot of people feel better if they can meet us in person. And if they can see the property in person, it makes them feel more comfortable. And even just being in Cincinnati, just knowing Cincinnati, it makes people feel comfortable investing in Cincinnati. So we've really just grown it organically just with our network and just allowing that to expand.
Hmm. Did you get the objection of, you haven't done this before? How do you know what you're doing, sort of thing?
Yeah, for sure. So again, that's why usually you start with the people that know you, love you, trust you for other reasons. My parents, my in-laws, and best friend from church, they all just know what kind of people we are. They did see us do the flip and the duplex. So yeah, the 16 unit was a lot more, but we've seen you guys work. We've seen the way you operate. We just trust your work ethic and your integrity, and you guys are going to make it happen. But your family and best friends are the ones that will trust you to that level. But then we'd done the 16 unit, the 8 unit, and the 10 unit, and we had gone full cycle on 2 of those already when we got the 45 unit that we raised capital on. We had a short track record. We did have something. We successful flip, successful duplex, successful 16 unit, successful 8 unit was the other one. So we had a little bit of a track record, but again, those were people that got to know us a little bit and just trusted our work ethic and our integrity as well.
Hmm. Yeah, that's super helpful when you're doing that.
Yeah, we did get some for sure. There's some people that I think just didn't even reach out, didn't show any interest at all. So there's some people that are still thinking about investing with us today that have just, and I'm even thinking pref equity groups. There's some bigger money that are even more patient. And then there's some people that waited till our 5th deal to jump in with us. And okay, now I see. So just different people have different risk tolerance, or maybe it's because of how well they know us and stuff like that. So we've had plenty of pushback. There's plenty of people that decide not to invest with us as well.
Yeah, the capital raise aspect of things is almost like a full-time job in and of itself.
Yeah,
Guys at other firms, that's their full-time job,
yes.
is investor relations.
Yeah, because for us, there's enough deals out there. If I offer the highest price, I can buy a ton of units. But if we can't raise enough capital to take it down, then we can't buy anything if we can't raise capital. So it's really, yeah, we're only going to buy really good deals. So finding really good deals is always challenging, but having the capital to take them down is just as challenging. You're absolutely right. Sometimes it feels like everything we're doing is for the capital raising, because you guys find the deals, right? So like I don't need cold calling. I don't send mailers. Like, you brokers are doing all that. So I'm not going to try to compete with you guys on that. So I don't really have to do that much to find the deals. I have to underwrite a lot, talk to you guys, go do tours and stuff, but that's not that much time compared to all the time I spend trying to raise capital.
Mm-hmm. Yeah, that's a whole nother animal in and of itself.
Yeah.
That's a sales job in and of
Yes,
itself.
it is. Yep.
And managing those relationships. Now that you've taken everything in-house, managing everything, what sort of technologies are you utilizing or leveraging to help make your job easier?
Of course, we have a property management software, Appfolio, that's great. And honestly, we try to keep things as simple as possible. So we just try to do everything through Appfolio. Just however it does this thing, that's how we're going to do it. And even if there's a cheaper, a little more efficient way with this company or this thing over here, we would rather just keep it all simple. It's all going through Appfolio. One example is some nice technology that integrates very well with Appfolio is a thing called CodeBox. And it's, again, you can probably get these so many other places, and maybe it's cheaper, maybe it's better, but you can do CodeBox right through Appfolio and then immediately integrates with Appfolio. But you can imagine a box hanging on the doorknob with a code, but it integrates with Appfolio. When somebody comes in through our website that we built through Appfolio, we have a calendar they can sign up for a showing anytime they want, because this code box is going to send them a code 2 hours before their showing time. Again, could be 8 in the evening, and they get a code, and they go out there, enter that code, use the key, open the door, shut it or whatever. 2 hours later, that code won't work. So that's a way.
And it's specific to that person.
Specific to that person. Absolutely. Yeah. It just comes to their phone, and then it won't work, and the next person gets a different code. We can do those. People can come and show themselves. And honestly, today, I think a lot of people would rather do that than have someone breathing over their shoulder or whatever. And then we don't have to ask our property managers to stay in the evening or come in on the weekends. Like, people can see it themselves, and then we'll just follow up with a phone call and talk to them. So I love that technology, because we want to be a good employer. And that's a great way to improve the lives of our employees, that they don't, have to worry about being there. You might be giving up some of the sales part of it where maybe they could sell this person, but I'll give that up. I really like that technology. Another one, this is something real simple, is some people have different phone services and all. People ask us like, how are you going to set up the phone in the office? And we use, oh gosh, now I said it too quick. What it's through Google, not Google Voice. I'm bad because I'm actually looking on my phone to see if I can see the app, and I don't even know if I can because I'm not that involved in our property management company, got a partner. But I'm going to think of it, Ring Central. That's what it's called. So it just goes through our property manager's cell phone. So we don't need an extra phone. It just goes through the cell phone. But our phone number is 888, the number 3-fold PM, property management, because that's Threefold property management. So it's something easy to remember. So we put that on every sign. When you dial that number, it's just a multi-level phone system. So when you dial that number, it says which property are you calling for. Okay, so pick that property. Okay, are you calling for maintenance or property management? A couple other choices. Property management. Okay, now it goes to that property's property manager. It goes to her cell phone, but they don't know her cell phone number, right? So anyway, I really like that technology to read through all these calls, and some of them it'll just do to a voicemail. So we're not bothering them and stuff. And then, yeah, so just some of the technologies that help us run our properties, run them efficiently, but also not try to make the job better for our property managers and our maintenance guys.
Yeah, I like that. It definitely makes things more efficient, doesn't it? It removes I don't want to be the bottleneck in our team. Nate or William are better at certain aspects of things than I am. And vice versa. I'm much better at certain things than they are. And so let's just allow everybody to play to their own strength. So with that box score, I would presume that, or what did you call it? Code box. I would presume that you can say, okay, like you can't go see a unit at 10 at night. So it's probably from 8 to 8 or something like that. But
yeah, and that goes back to that calendar on our website. You can set certain hours on the calendar.
It's like a Calendly. That's awesome.
Yeah. Yep.
And then, yeah, that's super helpful. And then you brought up it might take away some of that sales aspect of things, but really found like with deals, you can't sell somebody on a deal.
Yeah.
My job is just present the opportunity. Because if you try and hard push somebody into something, be they a tenant or be they a buyer for that property, as soon as something goes wrong, they're out. They're going to pull out.
Yeah.
And it just becomes a waste of everyone's time. So it's
Yeah.
almost like in my practice, you almost have to be aggressive, but passive at the same time, and not passive aggressive. That's a different thing. But you got to be like, hey, I'm here when you are, ready when you are, but at the same time, let's go.
Yeah, that's a balance. It's a balance, right? You got to strike that balance.
Yeah. You mentioned it a little bit, but what is, in your opinion, the role of brokers? What do great brokers do, and what maybe sets apart an average or mediocre from a good broker?
Yeah. I think what I would say, Stash, is like brokers are salesmen, and that's fine. I think most buyers and sellers just realize, hey, they're going to put their best foot forward as far as this property that they're selling. So they're going to talk well on it. And so that's fine. But there's some brokers go to another level of where it feels more dishonest than just putting their best foot forward or just trying to present a good sales opportunity or whatever. And so I really appreciate when I feel like a broker is being honest. And you're right, Stash, like, if you try to sell the property and you're being a little bit dishonest again, then you're right. The first time someone kind of figures that out or starts to figure something out, they're going to want to back out. Versus if you're up front with them and honest about maybe some of the shortcomings of the property, and that person still wants to get in it, then they're much less likely to back out. As a buyer, I want maybe I push back and say, it's really not that good of an area. And that comp that you're using for rent, that's a better property in a slightly better area. And maybe the broker disagrees with it. Maybe I'm wrong. I'm not saying like the brokers just agree with everything, but if it is true and the broker's like, yeah, that's true. You may have a little bit of trouble getting to quite that rent. I just like that kind of stuff where a broker's being honest. And I think that's, yeah, to me, that broker, and that broker has to do that with the seller as well. The broker is telling the seller, hey, I don't know, these, you got a C-class property, but I'm going to tell you that your comps are this B-class property in this B-class area, even though I'm selling your C-class property in C-class area. That's just going to be challenging because then your buyer's going to come in and go, Sash, this is a C-class property in a C-class area. How can we compare it to a B-class property in a B-class area? And okay, now you have to try to convince the buyer because you told the seller that or whatever, right? So I think it's just trying to be as honest as we can about the property. Again, totally understand as a buyer, brokers are going to present it as a great opportunity because to somebody it's going to be, that's fine. You can put the best foot forward, but there's just a level, I think there's that line and there's some gray area, but there's some workers will step into, to me, like just being dishonest. I'd rather them stay in that area of just, hey, you're being a good salesman, you're doing a good job for the seller, but you're also being honest.
Yeah, I've experienced on courting listings that the seller will try and sell you on why that B class comp is the best comp. Look at this over here.
Yep.
And you have to have that. It's a willingness to walk away, really. At a certain point, if they get too aggressive, or let's make it a dialogue. Let's say, okay, if you want, I don't know, 10 million for it, but we're at 8 right now. Let's figure out a way to work together to get you in the current market condition to that 8 million or that $10 million valuation from your 8. Sometimes we'll put together valuations where it's, okay, here's our price range. And then here's your price range way over here in right field. Here's what the returns look like at that. And then it's a conversation of whether or not we think we can get them to that, or if it's just exceedingly premature. Sometimes that's what it is. And I'd love to work on this for you, but like we had an instance where properties were worth about half what he wanted on an exit. And he was just bad management. Yeah, we can play the game of throwing you under the bus to a certain extent. And that is our job in some respects, is to make the buyer think that they are better, faster, stronger, smarter, more handsome than the current owner. Like you can do this much better than them.
Yeah.
And I think that's an acknowledged like rule of the game, right? Because yeah, you can definitely do it better than the current guy. But I forgot where I was going with that, but
limits to it though. Yeah. No, for the most part, it's rare that we're going to buy property if we don't think we can, run it a little bit better. It's just like buying any business. You're going to buy a business that you think you can run better, right? And improve that business. But it doesn't mean you're going to turn it into a B class property necessarily. Yeah. And you certainly aren't going to turn it into a B class area. You have no control over that. So yeah, there's limits to that for sure.
Yeah, I remember now. The seller in this particular instance, he had handed off management to somebody within his firm, like his CFO or something like that, because he's got some other businesses, and like they wouldn't turn on the electric in the unit to allow it to be turned. They stripped all the carpet out of the common areas. And really, it was almost a lesson in 101 of what not to do when managing a property.
Yeah.
So it's like, we can get you there, but here's what we need to do.
Yeah.
I want to sell now. All right, fine. Yeah. Your pricing expectations are just not in line. And
eventually, the buyers will tell him. He's going to find that out one way or another.
The market speaks. And sometimes it speaks by giving you lots of offers at or when times were great, it was at or above whatever ask was. Right. Or the alternative is crickets. Yep. The silence is deafening. That happens too.
That's for sure.
When you're evaluating a property, and you're looking to implement some value add strategies, what are like the low hanging fruit or the things that you focus on first? When assuming you acquire it and you move ahead with the acquisition, like what do those things look like?
Yeah, value add really means increasing rent to me. Certainly, we hope we can control expenses. There's often some that we can do there, but often your value add needs you an increased rent. And so the quickest way to do that is to put money into the units and make the units nicer. But there's some things you can do on the exterior of the building to make it more attractive as well. And then it always helps when you put money into the exterior of the building or the common areas, even though that might not help you increase the rent that much on units that you're renovating. It goes a long way for the residents that are going to stay and whose rent you're going to raise. It makes them feel like the owners are putting money in this property. They are making a nicer property. So I could see, a little bit more of why they're raising my rent. Yeah. The lowest hanging fruit is just owners that haven't kept up with inflation, haven't kept up with rising costs of everything, and rents included. Their rent's gone up a whole bunch, about 20% during the COVID years. If you haven't kept up with that, we can come in and again, we're going to put money in the property when we do that, but that's a low hanging fruit. Another thing that comes to mind just on the income side is owners aren't charging for utilities, billing back for utilities. If you've got a boiler and water, is it sub meter, which it almost never is, then you're paying for all the gas, which is all the heat, and you're paying for the water, sewer, and then you're likely paying for trash. Maybe you're putting electricity in the resident's name, but and they're paying for the electricity themselves, but that doesn't even include their heat. The owner, the landlord is paying for almost all of the utilities. And if you're not billing any of that back, that's really a missed opportunity. And that's easy to come in and do because almost all of their properties are. So you're not going to get a whole lot of pushback from residents because that's what they're used to. You can come in on a property like that and charge 50 to $100 a month, and that doesn't increase your rent. So you're still going out to the market saying, we'll rent this 2-bed for $1,000 or whatever, but now we're going to add a $75 utility bill back. That increases income significantly. So that's definitely some low-hanging fruit.
Yeah, because it's a good offset against that.
But the residents are helping pay for the utilities that they're using.
Mm-hmm.
Yeah.
Yeah. When you're doing water, because I'm doing this renovation right now, and I wanted to sub-meter it, but I couldn't find anybody to sub-meter the water when we're installing things. So I think I'll just do like a prorated amount based on, we do it based on occupancy. Hey, it's baseline. I think there's a property management company that you used to use.
Yeah.
I think that they would do $40 a person, and then each additional person, it's like what, $15 or something like that? Is that how you break it up?
Something like that. So we don't get that granular with it. We'll change the amount we're charging for a 1-bed compared to a 2-bed. Yeah, a 1-bed, I know one property at one point, our 1-bed was 60 and our 2-bed was 80. We're just there assuming that the 2-bed's going to be used more. There's going to be more people. Sometimes you might say, hey, for a 1-bed, it's $60. And if you just have 2 people living there, even one, that's fine. But beyond 2-bed, yeah, it might be from maybe $5 to $15 more per month per person beyond 2. And then maybe same thing with the 2-bed. Maybe it's $80 for 2 people, or maybe you say 3-bed. Anybody beyond that is an additional, $5, $10, $15. I've definitely seen that. We just keep it simple, the 60 or 80 or whatever that we're doing.
Yeah, I was thinking about going as far as doing, okay, here's the bill for water, and then here's this is 6 units, so here's your share divided by 6, assuming, or maybe you do it based on the occupancy, like these are all 1-bedrooms, so it's okay if there's a couple here, but then you're just a single person, so maybe they pay slightly higher. I don't know. I haven't figured it out yet, but that's something that I guess just math or an Excel problem once you.
Yeah.
And then you produce a statement for each person.
Yeah. Just depends how much work you want to put into it.
Yeah.
That would take time each month versus just what we're looking for is, hey, we paid $10,000 in water for this property last year. And so if we charge each unit $50, okay, that comes out to $9,500 for the year. We're going to lose or whatever. We're paying for $500 and the residents are paying for the other $9,500.
Yeah. I think the rules are the rules are that you can't really make utilities a revenue source. You can't make a profit off utilities. But what's interesting is that some of these developments in Columbus, for instance, they'll set up a private utility company. And I think that the original developer sets up the private utility company. And then I think they end up keeping that utility company. It doesn't transfer with the property. And so even if they've sold it, they still have this revenue stream for 30 years. And they're buying at a wholesale rate. The rules allow you to buy at a wholesale rate and then resell to your tenants at the retail rate.
Yeah. Yeah.
So that's a clever thing.
Yes, it is. Yeah. I've also seen people, they'll tell the resident, hey, your rent's $1,000, your utility bill back is $50. But in the lease, it just reads like your rent is $1,050. So it's really not a utility bill back. Technically, it's actually just your rent is $1,050. It's just you tell the resident, hey, the 50 of this is because we're billing you back. But the nice thing about that is when you can't get in trouble for overbilling because that's all we're doing. And the rent is 1,050. And then also, if you take somebody to court, you victim or whatever, and you're going to get back, you can't actually get back the utilities, like the utility bill back, but you can get back rent. So now you can actually go after 1,050 instead of just 1,000. So
Oh, interesting.
I've seen, but one way to do it.
All these little tricks, right?
There's a lot of them.
Yeah. So I'm curious if you want to, if you don't want to talk about it, we can cut it out. But you bought a deal up north of Dayton from a mutual friend of ours. And I think he used some, we'll say creative financing on it, seller financing.
Yeah.
When I speak with him, and I think it's just a tactic to in positioning of, oh, rents can't go up anymore and the sky is falling and all that. Like, how do you not, and maybe the messaging to you isn't the same as it is to me when he's trying to buy something from me and he's trying to beat me up on price. But I'm just curious, like when you identified that and you said, okay, I think that this is a good deal. That is it the same mindset of the owner has extracted everything that he can out of it and we see these other opportunities to go and do better with it.
Yeah, it probably is. Yeah, he was telling us a very different story on that property where he was like, yeah, there's tons of upside here. He didn't own it that long before he, sold it to us and we did seller financing with it. So they hadn't really tried, but they had gone out and raised the rent aggressively on just a handful of residents. Yeah, I didn't have to do any convincing with him on that, but yeah, it is important to hear from the owner or the seller. I take what they say very seriously. I also take it with a grain of salt, and we're going to do our own assessment on what we think the property can bear as far as rent and what we can do with it. But yeah, it's great information. We take it with a grain of salt. In that scenario, yeah, he was very much, they didn't own it for very long, didn't want to own it. It was part of a package that they bought. And they're just like, yeah, you can come in and do great with this property. We don't really want to. And usually you got to say, okay, well, why don't you want to do it? Or why couldn't you do it? Why can I do it, but you can't? And this one, it did seem like they just didn't want to own this one way up north of Dayton. And we were fine with that. Yeah, so far it's been great. We've raised rent a lot. It's been good.
I think that'll be a good opportunity for you. So I'm anxious to see how it shakes out.
Yeah.
On that line, what are your thoughts on where we've had these sustained high interest rates for quite some time? What do you think the future of multifamily and real estate investing looks like?
I am in like recession camp personally. I don't think we avoided a recession. I think we kicked the can and did a really good job of that. I think the leading indicators are showing that people are tapped out, unemployment's rising. People are now like being forced to go back to work because they went through we had incredible savings build up because of the helicopter money and all this stuff going out, the PPP loans and just so much money sloshing around. That's really run out. People are out of their savings now. Credit cards are now all-time highs, and credit card borrowing and delinquencies are ticking up. Now unemployment's ticking up. I think it's all heading in that direction. I do think we're going to have a recession. I think it's going to be a significant one. When that happens, the Fed always lowers interest rates. So, and I think people are predicting that. But I think people will keep looking at it and going, oh my goodness, like the Fed's going to lower interest rates. And so that's going to be good because they only see one variable changing. They're like, everything else will stay the same, but interest rates go down. So it's going to be like prices are going to skyrocket. Well, not if they lower interest rates because unemployment's at 5%. No, prices won't skyrocket. Prices will be falling because people can't afford to buy just because interest rates are down when they don't have a job. And then companies are making less money. So everything goes down. And the Fed is always just chasing, just like they did on the way up. They're going to chase the way down. I think a year from now, we're going to be in a bad recession. Interest rates are going to be very low, but it's going to be a tough, scary time like recessions always are. And Dash, I should have said at the beginning, this is what I want to have happen. So this is probably going to happen. But a year from now could be an amazing buying opportunity. The tough part will be, now I didn't invest back in 08, 9, 10, 11. I wish I would have. But it's hard to get money. It's hard to get capital. So I've been spending a ton of time trying to set that up so that if it does play out like this, then I'll have access to capital. And some of that is like bigger money, bigger pools of money that do go shopping when things are on sale. So That's what I'm hoping for, but I do see a lot of signs. It's taken a long time. I thought it would happen last year already. So the first admit I was way early and wrong last year, but I still think that's the direction we're heading at. I think it's just taking a long time to get there. If you look at how long the 10-year, 2-year treasuries have been inverted, that inversion everybody talks about, it's one of the longest and one of the deepest in history. I don't think that's wrong. I just think it's one of the longest times because it'll uninvert before. Usually when it uninverts, that's when the recession actually starts. And that's, again, because the Fed will start lowering interest rates. The short end will drop down below the long end again. I think all that stuff's coming, and I think it's be a great opportunity. Just real quick, because I've already talked too long. Long term, I'm completely sold on multifamilies. Just be in that recession environment, rents could go down a little bit. Rents usually don't go down very much. They definitely could go down a little bit. Occupancy will go down. Delinquency will go up. So the stuff that we own will struggle more. We'll be okay. We fix that, and our properties are cash flowing very well right now. So the cash flow may be a little bit less. I won't like that, but I'll take that because there's going to be a lot of forced sellers, a lot of people getting out. And so then I think we're going to see some really good deal, and praise God if we do. That would be amazing.
Amen
Finally,
to that.
we've waited a long time.
Yeah, I think from my perspective, last year we did, and even into this year, we've been keeping track of the spread between buyer expectations, what we're hearing in the market, and what we see as financeable, and seller expectations.
Yeah.
And there, it was about 20% on average last year.
I believe that.
And it still is about that much, but we are seeing more deals fall into line where, okay, we're ready to meet the market. And so you still have those outliers of 15, 20, maybe even 30%. You try and, it's the right word, filter those before you even get to the underwriting.
Sure.
But you still have to put it through the Excel sheet to see if it's going to, saying there's a chance, a path. But yeah, we've had a couple of successful processes in that. We've gone through the marketing, call for offers, selected buyers, and we're headed to contracts on a couple of deals that we recently marketed, and just came out with another one last week. And I think we'll have 2 more coming out in the next couple of weeks. And I feel like we've got realistic sellers on everything we're working on generally. So
that's music to my ears. That's a good thing.
Yeah, we'll see it.
Yeah.
Cool. I guess if somebody is interested in investing with you or just learning more about what you're up to, or maybe selling you a deal, what's the best way to get in touch?
Yeah, I try to be pretty active on LinkedIn. So if you look me up, Lee Yoder on LinkedIn, you should find me there. And then just jump on our website, threefoldrei.com. So that's 3, like the number 3 spelled out, and then fold, and then REI is in real estate investing. So we got a free ebook that I wrote on there, some educational videos, and you can contact us through the website. So yeah, just jump on our website.
Lee, you're awesome. Thank you so much, my friend. And I hope you have a great rest of your day.
You too. Thanks, Sash.